dancing on the campaign trail and focus on the dancing city. There's a lot awaiting our country as a result of reckless mismanagement by Alhaji Bawumia's government. Ladies and gentlemen of the press, you recall that when the NDC government was exiting power in December 2016, under the leadership of then President John Mahama, the cedi was trading at 3 cedis 80 pesos to $1 compared to the current 14 cedi 95 pesos as at to the US dollars as at yesterday. And I'm hearing that today the cedi is trading at $1 is trading at 15.05 as at today. Shockingly, but not surprisingly, the vice president, who doubles as the chair of the government economic management team, Alhaji Bawumia, has told Africa Watch that the cedi has performed better under his supervision. This is a palpable lie, of course. Statements such as this from Alhaji Bawumia have significantly damaged his reputation, as many people treat them with contempt it deserves, or at best, comic relief. Many businesses and households have questioned the voodoo conclusions of Alhaji Bawumia on the fall of the Ghana Cedi on his watch. How is Alhaji Bawumia able to look Ghanaians in the face and claim that the exchange rate of 14 cedis 95 pesos to $1 in 2024 is better than the 2016 year-end 3 cedi 80 pesos to $1?
Ghanaian workers and their families are grappling with high cost of living and inflation of over 25%. Exchange rate of the cedi is now almost 14 cedis, if not more, to $1, compared to about 4 in 2016. That means workers who earned monthly salary of 1,000 Ghana cedis in 2016 were taking home the equivalent of $250. Today, 1,000 Ghana cedis is only $71. The depreciation of the cedi at this monumental scale, that is about 250% depreciation, represents a huge decline in living standards of Ghanaians generally and workers in particular. This is so because of our over-reliance on imported goods such as medicines, refined petroleum products, and food, whose prices are directly affected by the exchange rate of the Ghana cedi.
Right. I guess for this next segment, Godfred A. Bokwing, Professor of Finance and Economist, University of Ghana, Dr. Kwabena Nyarko Otu, Chief Economist and Director, Labor Research and Policy Institute, Trades Union Congress, Charles Kusiapia Kubi is Head, Business and Economic Bureau of GUTA, and the Member of Parliament for Tamale North, Alasan Suini, is still here with us. And as I bring them on, you have some messages. I'll try and share them in the next batch. And the show is brought to you by Bank of Africa, strong as a group and close as a partner, MTN everywhere you go, Ashasi University, educating ethical and entrepreneurial leaders for Africa. Robert & Sons Optical Services, your comprehensive eye care service provider for 33 plus years. My Way Insurance, dial star 165 hash on MTN to join My Way today. Syntex tanks, it's strong, it's tough, and Flamingo paints, simply superior. So let's begin with Suhini here. And so what's the point of the press conference? People know that the cedi has taken flight, and people can feel what they feel. So if you organize a press conference and you simply repeat the fact that the economic hardship is worsening. What have you done?
Well, Samson, there are two ways to deal with a nation in crisis. One is to, as a leader, show empathy if you are unable to resolve the challenge immediately. And the other is to give a direction to the people as to how you are working to get them out of the problem. So two ways. You either show empathy or you give a direction and rally everybody around the way to get out of the problem. Unfortunately, in our circumstance, what we have is offbeat dancing. You go online and you see the chairman of the economic management team. And mind you, we are discussing economy. And it's because of the mismanagement and clueless handling of the economy that people are in the state that they are in. And yet you go online, social media, and the first thing that hits you is an offbeat dancing economic management committee chairman. And it's as if what is at stake is not about businesses collapsing. It's not about people struggling to keep body and soul together. But what is at stake is an election to win. It's as if that is the only thing at stake. It's an election to win, not a nation to build, not jobs to save, not businesses to save, not an economy in distress to salvage. And I wish I could provide a context to this discussion, Samson. I'll try, but because of time, I may skip some of the things. Our economy faced challenges between 2014, 2015, 2016, thereabout. As a result of a single spine salary structure that we introduced, that was considered to be revenue neutral, but didn't turn out to be so. Worse, we had an energy crisis. An energy crisis that was due to three challenges: debt in the energy sector, low generation capacity, and unsustainable supply of fuel. These three challenges led to an energy crisis coupled with the introduction of the single spine. Single spine, by the way, that led to the doubling of salaries of many public workers. Then we also had the tumbling of commodity prices around that time. And so the economy was hit so bad that the cedi started moving from 2 cedis thereabout to about 3.84 cedis. And we're all alarmed as a country. In fact, I remember a man of God preaching with alarm that the cedi was almost hitting 5. And that was unthinkable. Fast forward. By 2016, the triple challenge that created the energy crisis were resolved. The fuel was resolved through the fast tracking of Ghana gas coming on stream. The generation capacity was resolved by bringing in Ameri and the other plants,
to the point of having excess capacity.
To the point of having excess capacity. And then the debt situation was also handled by the introduction of ESLA. That was supposed to generate revenue every month for the settlement of these debts. And so the single spine effect was somewhat neutralized. And then we created, a fiscal space for the government to begin to raise revenue from the bond markets and others. So the EIU in 2016 predicted that government of Ghana's GDP was going to grow by about 8% in 2017. This prediction was in 2016. And so in 2017, a new government took over and perhaps sustained these hard work and gains that had been made. And so we posted about 8%. And then they sustained the gains. But guess what? They stopped the investments and the hard work that led to that prediction in 2016. And so the signs started showing on the wall. They went on a debt binge, accumulating debts and celebrating with kenke parties. And the debt is the core of our problem today. Any economist will tell you. They moved it from about 120 billion to almost 600 billion. And
there was a banking crisis, and they needed to find 25 billion that was not contemplated to pay for.
You know, that's for another discussion. But their approach to dealing with the banking crisis has been proven not to be the only approach they could have used. And perhaps if they had used another approach, the cost would have been better. And that is where the cluelessness of their approach comes in. If they had used a better approach, maybe we would not have had to spend as much as we spent and still ended up collapsing businesses and creating unemployment as a result of the approach that they use. So, like I was saying, they binge on that. They were clueless about the excesses that they inherited and even stopped contributing to some of the buffers that were created. And as a minority then, we kept ringing the bell, the alarm bells. But it was not obvious then for everybody to see. And then COVID hit. Look, this government had the best goodwill ever. Even under COVID, the revenue that came to them, in my view, wouldn't have even been realized if we didn't have COVID. So it was actually a blessing in disguise if you look at it in terms of how much money was at the disposal of this government. And mind you, this government also have had the opportunity of being one that has raised the most tax revenue from the people of Ghana with little complaint. How many demonstrations have you seen on the streets against government increment in taxes? And yet,
so we get into the end of your presentation.
Yes, and yet they have been able to raise almost 300 billion tax revenue in the last couple of years. So, to whom much is given, much is expected. And so we did not, as a country, have any business getting to a point where our debt levels become unsustainable and we are unable to pay them as things stand today. We have had to endure multiple haircuts. As things stand now, we are not even paying our external debt, and yet we are unable to manage the stability of our cedi. And so it is as a result of this reckless management, and that is why the minority had to remind the people of Ghana again that, look, we rang the bell, the alarm bells earlier, they didn't listen, and unfortunately, we are in this mess, and they don't seem to even recognize the mess that we are in, and are not suggesting ways to deal with it. Rather, what the things they are doing are making things worse, and that's why the minority leader pointed to the off-budget expenditure that they are engaged in. That is further bringing pressure to bear on the city.
Go to the Chief Economist and Director, Labour Research and Policy Institute of the Trades Union Congress, the blunt-speaking Dr. Kwabena Otu. And Doc, I've just been asking Suhini, and he repeats the complaints. We have heard the TUC speak about the difficulties, the clear issues of businesses, leaving the country and so on. Should it be a period of just making complaints? Please unmute your mic.
Okay, thank you, Samson, for having me. And I think this is an important conversation. But before I go into the city thing, I want to place on record that the Sangre Spine was not the cause of any of the economic crisis that we have had. Sangre Spine today, the average salary on it today is about 2,500 Ghana cedis. It was much less when it was introduced some 14 years ago. But I leave that for another discussion. And we need to be a little bit more dispassionate about the causes or the recurring challenges that we face. The workers of Ghana are too hard-pressed to be blamed for any economic crisis. Something on the Cedi, I recall the discussion we had almost 2 years ago about the Cedi depreciation. And for me, the unnecessary reaction from the Bank of Ghana at the time, particularly issuing a statement attributing certain things to me, certain statements I've made on the program. I thought it was unnecessary because they should focus on the bigger picture and not focus on individuals expressing their views and frustrations about the Cedi depreciation and its impact on Ghanaians. Again, I also made I made this recollection to remind you and listeners that something you have had too many discussions about the Cedi. It means that it has become a recurring problem. It is. And I'm not sure we will have anything new to say about the Cedi and its depreciation. Okay. It boils down simply to the structure of the economy we have. The structure we spoke about eloquently in 2016, the Gordgesberg economy. So you have an economic structure of production, export, and an external payment regime that essentially put pressure on the Cedi. So the most important productive sectors of this economy are in foreign hands, gold and oil. So you realize that when we export, we actually are able to achieve a trade surplus. But then developments in the capital account, where we have allowed the foreign companies to repatriate large sums of dollars, means that the trade balance is overwhelmed by developments in the capital account, and the Cedi will continue to depreciate. So the Secretary General on May 1st talks about our excessive import. It is one aspect of it. We are importing nearly everything. Then the little dollar that comes in is also in the hands of foreigners. When you are in an economic crisis such as this, you need to leverage on your resources, and in our case, the natural resources. But for a very long time, we have placed those natural resources in the hands of foreigners. And it's in their interest to repatriate those things. And we should not forget that the exchange rate is simply a price. So there's a price we are paying for the excessive demand of dollars or any of the other international major currencies. And we are demanding it to import goods that we could conveniently produce here. So the underlying causes we all know, and there's very little new that anybody can say. But then come back to your question. Is anybody listening? We have complained a lot. And it seems to me that those at the helm think that they have their own solutions, and that solution isn't working for Ghanaians. Now, something, if you talk about the depreciation today and its impact on workers, it is disastrous. Prices are increasing on a daily basis. Meanwhile, the wage is fixed at a particular point in time. Okay. For the businesses, I mean, I pity them. But they are able, on a daily basis, to change their prices to reflect the changes in the exchange rate of the imported materials. How do workers How do workers respond? They respond by just using their static, stable salaries to meet the changing prices the businesses are offering on the market. Okay. So I agree with you. Probably we should move beyond the talking. Okay. But even before we move, I think that this economy has been in crisis for many years. Okay. I mean, once in a while, things come to a head. Okay. Like 2 years ago, when the depreciation became very rapid over a short period of time, then we talk about it. But in between the 2 years, there has been depreciation. And so I find it difficult that we talk of crisis only at a particular point in time. There's crisis in our households. There's crisis at the domestic production front. Businesses are not able to surmount the rising cost of production and all that. And probably what we need to be doing at this point in time, and as part of the talking, is to be able to have a national economic forum, not just once, but every year, for all of us to agree that the excessive import is hurting this economy. We should patronize. For all of us to agree that we need to do something about the external payment regime that we have so over-liberalized, and people can transfer any amount of dollars out of Ghana. For all of us to agree that something 2 years ago, when we were talking about this, one of the issues we spoke about is the way we have allowed our currency to be traded openly, informally, across, in front of police stations. You have people standing there around the airport roundabout, trading in the currency. The Bank of Ghana did something about it briefly, and those people disappeared. Today, they are back on the street. We need some consistency in tackling the challenges, not this upbeat one-off attempt that we do. And then if our suggestions are not being heard, are not being taken on board, probably as unions and as civil society organizations, we should do what unions do. We need to power pressure on the managers of the economy, not just these managers, the future managers that will come, to make sure that they do the right things for the people of Ghana.
Import substitution, you have stated over and again, is one of the surest ways to prop up, not just prop up the economy, or do so in a manner that is sustainable. 1D, 1F was brought in. So what are we doing wrong that we still can't seem to resolve the problem, even in the face of bringing in programs like that?
Okay. So it's amazing that we are launching factories and industries, but the import bill keeps rising. Okay. So what we are doing wrong, in my view, is that we are not actively supporting a domestic production sector. Okay. We are not doing that. The Americans do that. Look at Biden and his buy made in America. Look at the Chinese. Look at everybody is doing that. But we have something here we call the import lobby. Okay, so not long ago, the radio stations and television stations that were promoting buy made in Ghana rice were threatened by the import lobby, and they stopped. So this morning, for example, I heard on another network that there's an excess of domestic rice on our market, but nobody is buying them. And we are still consuming large amount of rice that have been stored in silos for decades. Okay, the import lobby is strong. And we are in the political season. They are actually funding political parties and will surely dominate the policy discussion after the political season is over. We are doing something not right. Our cost of production domestically is too high. Our infrastructure is too weak. Now, when you are at this stage and level of development, you need a special program to support and, I dare say, to protect domestic production. Unfortunately, we are not doing any of those things.
In the meantime, how are your members, coping and surviving these really, really telling times?
It's, as people say, Ghanaian workers are magicians. It's really terrible for not just our members, for ordinary Ghanaians.
That's right.
Everybody. Our members earn a salary. It is so woefully inadequate, okay, to confront the changing prices that we see on a daily basis in our market. But you should also remember that there are just so many Ghanaians that do not earn any regular incomes, and they are having a hard time putting body and soul together. And this is the more reason why we need a national conversation going, a serious non-partisan conversation about how we arrest the fall of the city, about how we produce domestically, about how we encourage Ghanaians to buy made in Ghana, but about how we also use policy to limit import, to support domestic production, to support the businesses that are doing their best, but they are suffocating under the unsustainable competition that we have introduced them to.
All right, Dr. Kwabena Nyako Otu, Chief Economist and Director, Labor Research and Policy Institute, Trades Union Congress. It's a pleasure always talking to you. Looking forward to speak to you very soon. Thank you very much. Now let me bring on Charles Kusi Apia Kubi, who is Head Business and Economic Bureau of GUTA, the Ghana Union of Traders Association, right? Charles, thanks for making time to join us. Please unmute your mic. Hello, Mr. Apia Kubi. Please unmute your mic.
Okay.
Great. We have you.
Hello, we have you.
Thank you very much. Thank you very much. And Professor Bokwing, hold on there for me. I want you to hear all of these people, and then we come to you to wrap it up nicely. Now, clearly, we know that businesses are suffocating and so on. But how bad is the situation? Hello, Charles. Okay, just a bit of a problem there. Let's.
Can you hear me?
Go ahead.
Can you hear me now?
Please go ahead.
Good. You're asking now about there's no words to describe the situation we find ourselves in. And anytime we talk about forest hiking, there are three risks that we are exposed to as businesses. We're looking at economic exposure risks, transaction risks, and translation risks. So I'll take my time to give you an idea how we are losing out as businesses. We started the dollar from January around 11 cedis 90 pesos. And today, dollar is hovering around 15 cedis to the cedi. So a typical example, if my working capital is $100,000 that I used to import, that means that any part of this January, I need about 1.190 million Ghana cedis to import. Today, as we speak, I need about 1.5 million Ghana cedis to import same value of items. I've been doing that. So you do the subtraction, I need extra 310,000 Ghana cedis to do that. This translates to capital depletion because I will need an extra 310,000 to support what I have to meet the same 100,000 Ghana cedis. So when you look at the depreciation of cedi from January up to date, we've lost almost about 26% of our working capital. As if that is enough. When you're able to import, our CIF is indexed in dollar. GRA will tell you is convertible currency. But it must be benchmarked to the current dollar rates. Not, of course, also add to the cost of importing. As businesses, when we are doing our cost structure, we factor all these things to it. So obviously, prices of items obviously go high. And you ask yourself the question, if I'm able to even pass on the cost to the consumer, do they have the purchasing power to meet that? Hello?
Yes, go ahead.
Good. You ask yourself the question, do the consuming public have the purchasing power to meet such extra costs that are passed on to them? And the answer is no. So what happens to us? You have stock, but there's no sales. And mind you, most of us are running our business on debt. That is, we're taking facility from the bank. Now, disposable income of the consumer have been depleted by inflation. They don't have the purchasing power. They can't buy. How do I make revenue to pay for my retiring debts with the bank? How do I pay my salaries? How do I make my statutory obligation with GRA? I can't. And this is staring at our faces. You see, from 2022, when we experienced similar issue, lots of businesses lost over 50% and more of their working capital. And some businesses even collapsed. They couldn't come back to the market again. And day in and day out, we've seen businesses falling out. So I talk about what they call the transaction exposure as a risk. You see, when you see your capital depleted as businesses, it becomes a worry to you. So you probably want to have an option of moving out from the market. But where are you going? You have no other option. That is how I can probably describe the situation we find ourselves in. It's so scary.
Are there any means that as Guta you are adopting to interact with the government and leaders of the economy to find some ways around this?
Differently, yes. We've done severally, as one of your guests suggested. There'll be more engagement, but is that the policymakers or the managers of the economy are not ready to listen to your options. So we obviously will be having this kind of conversation every day, every now and then. The point is, let's look at the structure of the economy. Unfortunately, our economy are in the hands of foreign hands. We don't have control of what happens here. We look at the FDI laws that favors foreign companies in terms of repatriation of equities and profits without any introduction of retention policy to ensure that whatever you gain in this country, there must be a certain portion retained to run your operations. Let me give you a typical example. We've discussed about the GIPC law that established equity registration with solely foreign companies that want to trade in Ghana. They need about $1 million to do that, and that comes with property, plant, and then equipment. So you look at the component of it, you realize that people have made the $1 million, but real cash will be less than 20% of what they have raised as $1 million. So we'll pick foreign companies who want to export. And you look at their import values, it's more than even the $1 million they have raised as the equity registration. So where did they get it from? That means that they have recourse to the little that we have reserved as a country to support local businesses. So we have told them that, wait, looking at the dynamics in the economy, can we engage our foreign partners or FDIs to say that now, bring the corresponding value of the imports you want to engage in Ghana. So you pick like the China Mall. If you know that every month you do $10 million, bring same corresponding value into the country.
Tell me this in a minute so that we can move on to Professor Bokpeng to try and find some other solutions. How much hope do you have, if any at all, that the Cedi's flights will be arrested? It will come back down and make things a little easier for you?
You see, Forex highs is influenced basically by speculations and sometimes expectations. So it is the responsibility of the managers of the economy to manage information when it comes to speculation so that they can reinvest some kind of confidence into the system. Now, people are buying Forex, but not for transaction purposes, but for speculation that the city will keep on depreciating. So as a way of safeguarding their investment, they will convert the city and keep it in the form of Forex. So it is the responsibility of our managers to give us hope, and not just with tourists, but with evidence that we are taking this pragmatic steps 1, 2, 3 to resolve the issue, not on politics. but real issues to resolve and to revamp the business environment. Because one, if they're able to do that, we as Guta, we as the business people will support such a call.
All right.
But until they leave speculations to the hands of foreign people, we will continue to have the cedi depreciating and no one will have hope in this economy.
All right. Thank you very much. Charles Kusi Apia-Kubi, Head Business and Economic Bureau of Guta. And on that note, we take a quick break. We'll be right back with Professor Bokpin. Godfred Bokpin is Professor of Finance and Economist, University of Ghana. Prof, we have been at this for a very long time. And thanks for the scholarship and guidance that you continue to give all of us on these issues. But look in the crystal ball and tell us, how does end of this year look like?
Good morning, Samson, and good morning to our cherished listeners and viewers. Samson, why do you want me to be the one to say what it will look like end of this year? I think it doesn't look that good. I'm hoping that it doesn't have to get worse than what it is right now, because in its present state, it's unbearable. The difficulty is that, Samson, there's practically no shield when it comes to the pass-through of the depreciation to businesses and households. The impact is almost synchronous. Elsewhere, in some jurisdictions, the pass-through of exchange rate depreciation takes some lag. But because of the overdependence on imports and the low local content in our economy, the exchange rate has almost immediate effect or impact on households and businesses. And there's practically no shield, okay? And there are no mitigating measures, right? And therefore, we are just exposed in the manner that it happens.
I don't understand that there's no shield and practically no mitigation measures or something of the sort. We were able to hold the dollar when it took a similar, flight. And we held it at 10, 11, thereabout for quite a while. So it is possible, Dr. Bawumia will say.
Yes, I do not disagree with that largely, but something that for how long? And within those periods, you notice that part of our foreign exchange management has been going to the international capital market to take dollars from euro bonds. And then also we support that with the syndicated cocoa loan. These are the two major inflows. Then some relative fiscal discipline. But something, as we speak right now, these two major inflows are all at risk. We've lost market access, right? So if you check, since 2007, with our first Eurobond issue, and even particularly as part of our revamped debt management strategy, inbuilt in that is going to the Eurobonds. So annually, we've been doing $2.53 billion from the Eurobond market to shore up our international reserves. Then we also get a syndicated cocoa loan. But from the third quarter of 2021, we lost market access, okay? Then also look at the other major inflows. Cocoa. Ghana is doing poorly now with cocoa production. Okay, so all of this put together actually putting some kind of our undermining confidence in the economy. And you see that also manifesting the negative sentiment that we see. But beyond that, something, part of why the cedi is behaving the way it is also consistent with the latest IMF-supported program. Under the IMF-supported program, they favor flexible exchange rates, which in itself limits the ability of the central bank to intervene in the market and fight off the depreciation, okay, by burning it through our reserves. Now, at the time we signed up onto the IMF supported program, in fact, December 2022, our international reserves on net basis had reached a precarious state. In fact, it was less than 3 weeks of import cover. Okay, so part of the IMF program is to build our international reserves to the level of 3 months of import cover by 2026. What that means is that it ties the hands of the central bank from coming onto the market to sell dollar, okay, on its own account in order to mitigate or moderate the depreciation. They can't do that now. They can't do that now. Okay, so if we're not under an IMF program, probably in an election year, the central bank will not sit unconcerned and probably would want to fight it off and burn it through the reserves. But we have a mandate target within the IMF supported program to build our reserves. And bear in mind also the reserves that Bank of Ghana had a cocktail celebration over, right? This is so simply because we are not servicing our external debt, right? Coupons and the rest of them. So why are we in this situation? Others have spoken about the structural issues, the conjunctural issues, and the rest of them. But there are other current developments fueling this negative sentiment. Part of that is also the delay with the restructuring of our external debt. By now, we were hoping that Ghana would have passed the second review, which would have occasioned the release of the third tranche under the IMF-supported program. But because the country has not been able to secure the MOU, which is a condition precedent to IMF board approving the second review, there's that delay. And then again, the uncertainty with the external debt restructuring. So that vacuum, the market is reading a deeper meaning into that. And that is why you see the negative sentiment has gone up. And the understanding in the market is that a negative news actually exerts greater volatility in the market compared to positive news of the same magnitude. Somewhere April, the Ministry of Finance attempted to preempt this by coming out and telling the market that they had reached agreement with our external bilateral creditors. That was supposed to calm the market. Once you reach that, then it shouldn't take us that long for the IMF board to approve the second tranche, out of which we may get $360 million. Usually, if that had happened and we had a board approval, that positive news would have probably engineered some confidence in the economy. Okay, now we are missing out on that. The other bit we also need to bear in mind, something, is that it's an election year. Usually, election year comes with its own uncertainties, right? Okay, so we have all this happening together with an election year that promises to be a competitive one. When it happens that way, in terms of portfolio flows into the country, there's a slowdown, right? So foreign investors would usually adopt the attitude of wait and see, right? Lest the election, before they commit to any major investment or portfolio flows to the country. Apart from that, the residents, you and I, businesses, because of that uncertainty, they are likely not to take major decisions. They may not trade their FX. They would rather prefer to store the value, yes, as a way of managing the uncertainty. Now, so if you put all these things together, so once we are not trading our dollars, look, assuming we had confidence in this economy and people are willing to trade their dollars, even the bedroom economy, and we're able to mainstream that into the mainstream economy, you will see some relative stability. But right now, there's no confidence in the economy. Everybody is trying to protect their value. So once you are, for instance, if you have 1 million Ghana cedis right now, there are very limited opportunities, options available to you, and you don't want to keep it idle. Then your basic instinct will be preservation. Then you'll be looking at a currency that is more stable, and the cedi is not stable. Okay, so people are cashing it from that perspective. The other bit, from a more technical point of view, is that the foreign exchange market, we can segregate it into two components. The spot market, where if you need $1 immediately or over 2 business days, you will go to the spot market. If you need $1 in 3 months' time, in 6 months' time, you don't need to be in the spot market. You have to operate in the forward market. But our forward market is not working. Okay, it's so shallow. So even for people who need dollars in 3 months' time, in 6 months' time, are actively in the spot market, accumulating the dollars right now. And so what it means is that we're actually fast forwarding the pressure of 3 months to today. And when it happens that way, there's no way the cedi will be able to hold its own against the major trading currencies.
This is
now, simply, let's come home. In this country, we are okay to do everything wrong and expect the cedi alone to do the right thing. The cedi is the pulse of the economy.
All right.
The city is the pulse of the economy. So it doesn't misbehave on its own.
All right.
Right. So
all right.
There is a reflection of some underlying weaknesses
okay.
that we need to resolve,
all
which
right.
we haven't done. And here we can even talk about the fundamentals of the economy. Look, Samson, we said it on this program. When we got the IMF program approved, actually yesterday was exactly 1 year. The 17th IMF supported program was approved on May 17th. That immediately delivered what we call the IMF honeymoon effect, some relative stability. And then we took credit for it and celebrated prematurely. We said, no, it is not a substitute for doing the right thing on the ground.
That's right.
And we haven't done that.
Okay.
We haven't done that. Then we suddenly expect that the cedi will perform a magic and the rest of it. Doesn't happen that way. And
Prof,
look, we can go back to what Dr. Bawumia said when he was in opposition.
Right.
If the fundamentals are weak, the exchange rate will
expose you.
Right. And let's ask whether the fundamentals have improved significantly. The answer is no.
Doc, thank you very much as always, Professor Bokpin there. And I'm in red, and there are many of you who are asking why. It's because my University of Ghana mate and very good friend, Dr. John Kuma, is being laid to rest today. In the meantime, as you always know, my outfits are supplied by Konati Clothing, not this one. They are at Adenta Shopping Center, Adenta Down. You can get them on 0244 676732. 0244 676732. Konati Clothing. What you wear counts. Just get in touch with them. They'll give you the best that you need to look your best. The final minutes.
Yeah,
what do we have to say?
Yeah. You and others to express my heartfelt condolences to the family of the late John Kuma. He was a very, very good friend of mine as well. And I think he made a lot of impact in our political space, in our governance, given the short time that he got involved. And we can only pray that the good Lord will grant him a peaceful rest and
Amen.
grant the family the presence of mind to overcome the loss, even though I know it's going to be very difficult.
That's right.
Now, let me say that Dr. Kwabena Nyarko got me wrong. My intention when I made reference to a single spine was not to blame workers. It was just to highlight the fact that a big revenue handle, I mean, not revenue, expenditure handle like that had been introduced without a corresponding revenue to government. And so it became a burden for government to do that balancing of neutralizing the impact on government revenue. Right. But it was a good thing, and I am sure that perhaps if we had even continued on the trajectory that we started, we would have started getting more benefits from that, introduction of the single spine. I still think that we haven't been able to match productivity that well to payments in this country, and that's
the value of people's wealth and their incomes have been wiped out so much. Yeah. And yet you're listening to Prof, you're listening to everybody else, and you're not getting
and you see, and that is the point about value. Look, I have done a basic explanation of this. If you had 380,000 Ghana cedis to trade with in 2016, your value of products or produce you could get abroad was $100,000 with 380,000 Ghana cedis. Today, with the same 380 Ghana cedis, you can't even get $30,000. That's a value of about $65,000 lost. And so if you were trading with 380,000 Ghana cedis, the value you have lost today is to the tune of over $600,000.
Thank you very much, $60,000. And those of you in Parliament, keep watching
the situation
and holding our managers to account. Let's see how it gets. As I invited you earlier, join us tomorrow. Join me tomorrow at 2, and we'll be asking if the courts can give demolishing orders, and when is demolishing lawful. Emmanuel Bright Atoko and Veronica Frimpong will be joining my weekly legal clinic. Join us to learn more. And these days, there have been some demolitions around the place. And let's see what is lawful and what is not. I'm Samson Ladianyanini. This has been Newsfile. Thank you. Have a good afternoon.